Welcome to the Remarkable Retail Podcast, Season 3, Episode 18. I'm Michael LeBlanc.
And I'm Steve Dennis.
Well, Steve, as you know, I spent a bunch of years in the as seen on TV retail, the TV retail with the shopping channel, which is like a QVC or HSN. And, you know, our guest today and his business model and what's happening actually reminded me of the go-go days of that kind of industry and how products got to market. Mm-hmm. Our guest today is Chris Bell, CEO of Perch.
Yeah, it's really, I think there's a few things that are interesting in this space. One is, you know, when we talk about Amazon, I think, and maybe I've got this wrong, but I think most listeners probably think of really the first party sales of Amazon. In other words, the products that Amazon carries and fulfills itself. But there's this whole world of the broader marketplace and fulfilled by Amazon. So we'll talk about that a little bit. But Perch and a few other companies are buying up these smaller retailers that sell on Amazon and kind of providing economies of scale and applying some of their expertise across the portfolio. And these companies have gotten some pretty rich valuations. So very hot area, really pretty new, really just emerged in the last couple of years. So it's interesting to dig into.
And attracting a whole lot of revenue, right? A whole lot of interest from VCs. Like there's literally billions of dollars pouring into this.
Yes.
I loved how you said it's a portfolio. That's how we used to view as seen on TV products. You wouldn't always know which one was going to hit. You know, you don't every day get a sham wow, if you remember the sham wow. But 1 out of every 10 would be a sham wow, and they'd pay for the other 9. Like it was always a portfolio strategy, right? So a lot of what he was talking about, I think it's more focused than that. Speaking of retail, let's jump into the news of the week. What's on your mind in terms of what's been happening this week in our industry?
Well, the big thing this week, as has been the case, I guess, for a couple weeks now, it's earnings season. So we got a bunch more earnings reports this past week. And as our standard disclaimers, we're not going to go through all of them in any detail, really just talk about what some of the highlights were and what it suggests. Overall, we continue to see, for the most part, we'll talk about an exception in a minute, but pretty much every retailer seems to be beating on sales and seems to be beating on income. And again, this gets into this issue of expectations and why perhaps Wall Street's expectations were a little bit more moderate. But in any event, the overall picture has been quite healthy. Consumers clearly spending, whether that's stimulus, pent-up demand, you name it. And I think the earnings certainly are leveraging the cost structure that's been, in many cases, optimized better, but also just it's not quite as promotional an environment. A few I just wanted to point to very quickly. Best Buy was kind of interesting. Their sales were only up like 0.5%, and e-commerce was down 10% year over year, but that's double pre-pandemic level. But Best Buy was one of the retailers you probably remember that's really been on a tear. So whether the slowdown, they didn't talk too much about supply chain issues. It seemed to be more of a slowdown because they were comparing to really robust numbers from last year, but their profits were up nicely, but nevertheless, the stock got hammered. So maybe Wall Street's starting to wake up to this, what I sometimes refer to as the great moderation or the great rebalancing of some of these stocks that performed incredibly well, but now kind of reverting to the mean. Dick's Sporting Goods. Oh, the other thing on Best Buy I was going to mention, a few retailers mentioned, is this issue in the U.S. of a great increase in retail theft. Some of these organized rings, whether it's being driven by desperate economic circumstances or what have you. But a number of retailers have pointed to that as a growing concern. And of course, sales associates then get nervous about being in the store. So that's definitely something to watch.
The Best Buy was interesting because he was saying very specifically, we're seeing people quitting and we're having a hard time with hiring because people are, as you said, they're getting nervous and they don't want to be part of any violence. And this has got to be addressed.
Yeah, I think it's a big issue. And to your point with the organized retail crime, the word spreads quickly, right? Both in terms of where there are opportunities as well as if there is a real crackdown, where to avoid. So big issue. We'll see how this plays out. A couple other earnings I thought was interesting. Dick's Sporting Goods, big sporting goods player in the U.S. Continues to do really, really well. I guess some of this you could count or say is due to the COVID effect of people working out more, those kinds of things. Their sales were up 14%. E-com pretty much flat, but also just like Best Buy, double where it was on a 2-year basis. So again, that kind of rebalancing, but still very strong if you look back to where they were a couple years ago. Dick's is also an interesting company in terms of innovation. Not only have they done well in their core business, but they've been piloting, I think it's 5 different concepts, 2 of which they said they were going to be expanding. I don't think they're saying they're not going to be expanding the other 3. I think it's too early. But House of Sport, which is more of an experiential, since everybody loves that word, and Public Lands, which is a more kind of REI outdoor, Cabela's outdoor kind of focused concept. They're going to be opening more of those. So a business that's got a lot of momentum. So the other one, or 2 others I'm going to mention quickly. Nordstrom was a big disappointment. The stock really got hammered. Their department store, the kind of main full-line department stores, were actually up 11%. But that was disappointing, I think, to a lot of people because Macy's, Kohl's, some others had reported much better numbers. I don't think it's surprising that Nordstrom's is not up as much because it's higher end, more going out kind of apparel. So that even though that part of the apparel market is getting better, it's still not anywhere back really to where it was. But they were up overall 3% on a 2-year stack. So not terribly exciting. The big problems, though, were in the Nordstrom Rack division, the off-price division, which was down a lot. And that division has been struggling for a number of years. I'm not quite sure what's going on there. I know there have been some questions of sloppy execution. Neil Saunders, who was on our show, Fault in the Stores episode a few weeks back, has called them out. I think the overpriced market is in general probably a little oversaturated, and there's obviously some issues with the supply chain there. But that was the thing that really seemed to send the stock down. The digital sales,
I think it's I think you called it the overpriced market. You mean the off, which is kind of a play on words. The off-price market is what we're talking about. That whole category, that and Saks off Fifth and all that. But I think that was a double entendre. So congratulations.
Yes, yeah. Well, sometimes these things happen, Freudian slips or whatever. A couple of other quick things to mention. Their digital sales were down 12%, but up 20% on a 2-year basis. Also not as strong as a couple we mentioned, but a lot of other retailers have reported. Again, I think this is somewhat the nature of the merchandise categories they're in. But the other thing is that Nordstrom's now has 40% penetration. 40% of their business is e-commerce, which is it's very, very high for a player that was principally a retail. So I think there's also just, it's fairly mature. So there's not as much to go up. But the thing that I thought was the craziest was after their stock got hammered, and we talked about off mic, Warby Parker going up on the COVID variant news, Nordstrom is now valued a couple $2 billion less than Warby Parker.
Unbelievable, right?
That just seems crazy to me. So short Warby Parker, buy Nordstrom. You heard it here first. I don't give stock advice. You shouldn't take it. But if I were going to give stock advice, that would be the advice I gave. And last one is
worth. And by the way, as you often say, worth every penny you paid for.
Exactly what you paid for it. And because it's Black Friday, 40% discount on the advice for the next 24 hours. So order today. So that's the earnings roundup.
As if Starbucks needs to get even more convenient. I mean, next thing they'll just be pouring some coffee down your throat when you just think of having a Starbucks. They've now teamed up with the Shop It Like You Stole It format of Amazon. Talk about that.
Yeah. Well, the old joke that I think from the Daily Show that the first Starbucks opened up inside another Starbucks, but they're varying. They're varying this. Yeah, they're testing in New York a combination Amazon Go Starbucks store, and I think this is actually pretty interesting. Not that combining 2 different concepts is a totally new concept. New. We've seen this in food service in particular. And it's not a shop within a shop. It's kind of designed in a coherent way. But what I think is most interesting about it is what Amazon Go brings to Starbucks, I think, is they bring the technology, certainly, but they also bring some additional day parts and additional product lines. If you haven't been in an Amazon Go store, dear audience, Amazon Go, in addition to the walkout technology, is a convenience store in some respects, but it's very much geared towards the kind of the office worker takeout, lunch, snack kind of items. And so I think that's quite complementary to Starbucks offering, which is, pretty light when it comes to dinner, lunch, and snacks. It's much more of a morning place. So I think that day part assortment is kind of interesting. And I think from an Amazon Go perspective, certainly a big traffic driver, a complementary item is coffee. And Amazon Go could offer their own coffee, clearly, but having the well-known brand associated with it. So we've got two companies from Seattle, just down the street from each other in Seattle, now just next to each other in one cohesive format. So we'll have to go see that, Michael, when we're in New York, but I think it's pretty interesting.
We'll pilgrimage to see the latest, greatest in Manhattan when we're there for the NRF, which is coming up in mid-January. So I want to before we get to our great guest, I wanted to remind folks that if you're listening to this, we have a YouTube channel with some bonus content, and you can see us chitting and chatting about stuff as well. We kind of break the episode down into 5 or 7 different episodes. So if you just want to hear one or two things, often our guest interviews are not on the YouTube channel because we just do audio for that. We both prefer audio, but there's lots of content there. Our guest today is Chris Bell, CEO of Perch. Great interview, fascinating business model. And let's do some chit and chat with Chris.
Well, welcome to the podcast, Chris. We're excited to have you here today. And it's our custom to welcome our guests and then just maybe start off if you could tell us a little bit about yourself and your personal journey. And then we'll dig deeper into Perch and what you guys are up to.
Yeah, absolutely. Well, thanks for having me, guys. So my background, real quick, is computer engineer by training. I started my career at GE Healthcare doing product management. I then took a pretty sharp left turn and went and I sold copiers and software for a couple of years at a local family-owned firm based out of Madison, Wisconsin. I went to business school at Carnegie Mellon, and then Bain & Co. hired me into their Boston office back in 2009. I spent 6.5 years at Bain. I did about a third of my time there in their private equity group, working on over 40 transactions. And then the other 2/3 of my time I spent working with retail and tech clients almost exclusively on customer-led growth type initiatives. So after being in sales, I just loved customers and wanted to help companies grow, and was lucky enough to be able to mostly work on that type of thing. Then in 2016, Wayfair reached out to me and asked if I would come and build their North America supply chain, which was yet another interesting turn in my career because I had absolutely no supply chain experience at the time. And I tried to tell
them. Hold on. How did that come about? That did you know somebody there?
Supply chain is never going to be important. Why would you want to learn that?
Yeah. So I did. They had hired a couple of other people from Bain. And I went in actually first to talk to somebody on their retail side, and thought that was a good conversation. And then they introduced me to their COO, and I thought it was just like, hey, meet the COO. He's part of the executive team. And then he started telling me about this Wayfair delivery network thing. And they weren't even calling it that at the time. They just wanted somebody to come and build their heavy, bulky supply chain. And I actually tried to leave halfway through that interview. I said, nope, sorry, got the wrong guy.
I'm in the wrong office. I'm in the wrong office here.
Yeah, sorry. Really. Yeah.
I just want to drop off the Penske file. I'm in the wrong place.
Yeah, pretty much. And he just continued talking about it. And I think maybe lucky for me and lucky for him, I was actually in the middle of a home remodel. And so he was saying things like 3PL, LTL. And I was like, I don't know what that means. And then he said, well, let's just talk about the customer experience. And I said, well, I know a thing or two about that. And I started to vent about the delivery of my vanity that had been broken 4 times. And he was like, yes, that's exactly it. That's what we need to fix. And so long story short, they convinced me that really it was a customer role and supply chain was just the means to the end. But as they thought about their customer experiences, I thought about their moat versus somebody like Amazon. The supply chain is really the most important part of that journey. And one of the biggest touch points with the customer, especially at Wayfair, where you're delivering heavy, bulky items like a couch. So you actually meet the customer. It's not like leaving a book on your front porch.
Yeah.
Oftentimes, two people are coming into your house, entering your personal space, moving things around. And then also, as you think about, in 3.5 years, we opened 50 sites across North America, 42 final mile centers, 8 sort centers. And there's a bunch of fun, interesting things we did in that time. But one of the most fun was when I joined Wayfair, average click to deliver for a heavy, bulky item was 27 days. When I left, we were doing 2-day delivery of head SKUs, so basically our best sellers in 15 metro areas across North America. And as you probably would imagine, conversion was way up when we badged them. NPS, the measure of customer satisfaction, was way, way up. 90-day repeat rate was way up. Cost was down about 15%. So it was fun. It was a really amazing time and an amazing company. And then I left in 2019 to start Perch, and that was driven by a couple of things. One was James, who was the COO, who kind of talked me into that role. He announced his retirement. And so I decided that was a good time for me to pull up because he'd been such a good mentor to me. And then I saw this opportunity within Amazon, and this is kind of a popular space now, but back then really nobody was doing this except one other person, one other company. And it was kind of under the radar, which was by itself interesting. And then it just felt like, I guess, two things. One, the opportunity seemed really compelling because it's big, it's growing, it's really fragmented. It's a space where scale should matter, should help, because if you think about all the companies that we acquire, they're really small consumer products companies, and scale helps a lot in consumer products, helps with supply chain and manufacturing cost, helps with access to capital, access to talent, access to other geographies and channels. 90% of the brands that we've acquired only sell in one geography and one channel, partially for working capital reasons, partially for administrative complexity and just access reasons. Amazon's very easy to sell on. Many other channels are still very hard to get access to. And the second one, it felt like a perfect match with my background. I've done a lot of M&A at Bain. I've done a lot of operations and supply chain and e-commerce work at Wayfair. And then early in my career, building technology. And that's a really big, important part of what we're building at Perch, because the difference between what we're doing and what, say, big CP does, like Unilever and Procter & Gamble, is, legacy CP is very acquisitive. They buy brands all the time, but they can't buy a $1 to $5 million brand because the way that they're structured, the headcount costs associated with running a brand would make that massively unprofitable for them. And we would be subject to the same issue, right? If we bought a $5 million revenue brand that was throwing off $1 million a year of profit, and we hired 5 MBAs to go manage that brand, all the profit's gone, right? There's nothing left, and we've just decimated the profitability of a brand. And so the only way that we can get around that is by building this tech platform that allows us to manage our supply chain, manage our suppliers, manage our pricing, our advertising, our merchandising, our customer service. And so we're buying some pieces of it, but a lot of it we're ending up building in-house, the platform to manage and grow these brands after we acquire them.
So, Chris, maybe it'd be helpful before we get too much into the details of what you guys do and how it works and your strategy and so forth, is just maybe, and I imagine, part of our audience probably understands Fulfilled by Amazon and the Amazon marketplace pretty well, but maybe you could just kind of give us a little bit of the lay of the land in which you play, and then specifically what it is you're trying to do with Perch, and then we can kind of go from there. Yeah,
absolutely. So a starting point that people may not realize is that if you buy from Amazon, about 60% of the revenue from Amazon's retail business comes not from Amazon as selling to you as a customer, but actually from what's called a third-party merchant selling to the end customer. So 60% of the things you buy is just Amazon acting as a middleman for something that Perch, for example, would sell, and you buy, and Amazon both sells it to you and then fulfills it to you as a customer and handles all the returns and payment and things like that. And so that is just an astounding stat related to that is Amazon's third-party marketplace is $300 billion of GMV, which is essentially revenue in 2020. So a massive, massive marketplace of them connecting buyers and sellers and just taking a cut of the revenue and charging for fulfillment and ads. And so to enable that, Amazon has what they call FBA, Fulfillment by Amazon. So we, as a seller on Amazon, we send our things into Amazon's warehouse, and they store it and they forward position it so that we can get Prime badging, so it can get to you, the end customer, within same day, 1 day, 2 day Prime badging. And so Amazon's created this really amazing engine where I'd say 5-10 years ago, if I wanted to launch a consumer product, I probably needed to raise $500,000 at least, because I would have to go buy I'd have to buy a whole lot of, there's what's called MOQs, minimum order quantities. So for a factory to pay attention to you 5 or 10 years ago, you had to buy a bunch of stuff. And then 2, to get somebody to sell it, you would either have to find a retailer and sell through there and pay trade allowances and promotions, or you'd have to set up your own website and you'd have to buy Google ads and Facebook ads and all these things that are very expensive to sell. Where today, if you Google this, you'll find YouTube videos that say, if you want to launch a product on Amazon, make sure you have at least $1,000 in the bank. So anybody with $1,000 can go and source a product from Alibaba or MFG.com or something like that, and then sell it on Amazon. And Amazon really doesn't charge you anything until you pay for ads or until you sell something. There's a little bit of storage fees, but they're very, very small. And so for the most part, Amazon has millions, hundreds of millions of people every day that come to their website. And if you want to sell something on Amazon, for example, the first thing I ever sold on Amazon was my business school books. After business school, I just sent my books in to FBA, and then money just showed up, a few weeks later after they were sold. Amazon, right? They sell it, they process the payment, they fulfill it, the customer gets it, they're happy, and then you get your money. And so it's really, really amazing how, one, they've just streamlined that whole process of finding customers, getting them, high intent customers to buy things, and taking care of pretty much everything for us. And so what we do is we find products and brands that have been successful on Amazon predominantly. We have a number of multi-channel brands as well today, but typically we look for kind of 60% or more of the revenue to be on Amazon, just because that's still where most of our revenue is and where we're most comfortable understanding the puts and takes of the customer dynamics and the advertising unit economics, things like that. So we find branded products. So we don't buy companies that are reselling other people's brands or companies that are just reselling commodities. So you have to have created your own brand. You have to have something that's unique about your product. Has to be selling on Amazon for at least 2 years. Has to be profitable. We look for a number of indicators that customers like your product. And so what we call product market fit. And so that means that you have to have ad spend as a percent of revenue, has to be below certain thresholds. Usually 20% is pretty high. Usually we like things that are closer to 10% of revenue. As ads, great reviews, high review count, low return rate, low quality issue rating, things like that. So we look for people that have launched successful products, and we give them liquidity, right? So several years ago, if you had a successful Amazon business, you just ran it for cash, and then maybe you got your kids to take it over, you just shut it down. And so we can offer liquidity to those entrepreneurs who didn't have it before. And then we bring it onto our platform, and we try to take it to, we try to optimize it on Amazon. So we have pricing tools and advertising tools and things like that. And then 2, we take it to other channels and geographies.
Now, is this a business model that you, in effect, created from an ecosystem, from within an ecosystem? Was this a model that already existed that you're working on perfecting? Tell me a bit more about the origin story, I guess, of the model itself. I guess it's all predicated on FBA and Amazon, right? So I also suppose there's perhaps some inherent risk about being so attached to a platform like that. Talk about that for a bit.
Yeah, for sure. I mean, in a bunch of ways, this isn't that new of an idea. It's just in a new space. So when I was at Bain, one of the most popular, and also whenever we did these retrospective studies at Bain on all the private equity transactions that we've been a part of, the roll-up strategy typically was one of the highest returning, was one of the best strategies for acquisition. And so people have rolled up dental offices and physical therapy clinics and steel mills, right? For as long as business has been around, people have tried to acquire businesses, put them together, and
consolidate markets, things like that, right?
Yeah. So it's a kind of a tale as old as time. And so it's applying a similar business model to this space. which in a bunch of ways somehow got to $300 billion in revenue and nobody really noticed, right? Typically, many of these other spaces where people are rolling up companies are not $300 billion market spaces and are not growing 30% year over year. And we're just talking about Amazon. If you think globally, this marketplace concept is happening in South America on Mercado Libre, happening in India with Flipkart, in Japan with Rakuten, in South Korea with Coupang. And so this is happening in a lot of places, and it's growing pretty quickly. And so, so it's not a new idea, but it's a new space. And there's new challenges with new spaces in that this is, when I was first looking at it, I went to a conference in New York and I met a few sellers, just like a seller conference. And one of them described it as the simplest, most complex business in the world, which I think has turned out to be true in many, many ways. And it's simple because a lot of what I just talked about, in theory, you don't have to attract your own customer. Amazon's attracting the customer. A lot of these businesses, especially the smaller ones, really make most of their money from one or two products. We've acquired a number of bigger businesses that have more of a product spread. And so you say, hey, it's a one or two product business, one channel, one geography. How hard can it be? But when you get into it, you're moving physical goods around the world. You're sourcing from Asia. You're dealing with tariffs. You're dealing with international ocean. You're dealing with import in the U.S. You're dealing with 3PLs in the U.S. You're dealing with Amazon, who is an amazing partner in a whole bunch of ways, but also an incredibly difficult partner.
Well, I was going to dive into that a little bit. I mean, Amazon has famously said, your profit is my opportunity. It feels like there's a lot going on here attached to them that they're not kind of saying, hey, it's nice that there's a big ecosystem growing up around us, but maybe there's an opportunity. Is that a concern, or you think that's just they're going to create a marketplace and other things that grow up in and around it are just part of that, their flywheel in a different direction?
Yeah, I mean, I think there are a couple of ways to think about it. But the main one, and we have, as you might expect, being in a business that sells mostly on Amazon, we have done our best to talk to people at Amazon and formally at Amazon and make sure we understand the lay of the land. And really, if we do our job the right way, which we try to, and I can tell you more about what I think is the right way, but essentially, like if we sell great products, have great customer service, have great pricing, try to drive costs out of our supply chain, take these products that are selling well and take them globally on Amazon and also other channels, that is helping their flywheel, right? What Amazon is trying to do is serve their end customer the best. And the big way that they do that is by having great products that people want to buy, have those products be in stock at great price points with great reviews, good customer service, all the right safety and compliance documentation. And so for sure, are they going to try to take a little bit more of our profit pool over time? Undoubtedly, they absolutely will. But we also have this interesting symbiosis where they are very clearly moving from first party to third party, right? They're realizing that when you have hundreds of millions of people who visit your site and buy things, if you could either take that inventory risk yourself or somebody else could take that inventory risk for you, why not have somebody else do all the hard lifting in terms of product launches, buying the stuff, floating the capital while it's in transit, and then taking the sell-through risk. And so pretty clearly with their actions, they've let 10 years ago, third-party sales on Amazon were like 2% of sales. Now they're 60% of sales, 62% of sales. And so this is how they're driving their deep assortment and how their success model is unfolding. And the consistent theme we've heard in the conversations with people, both within Amazon and formerly at Amazon, is one of their biggest areas of focus right now is high-quality sellers and high-quality products. Because if they get known as a place where, for example, there's lots of fake reviews, which I know there's been news articles about, and or poor quality products and high return rates, that's when they start to lose their end customer, because the end customer they don't want to shop around, right? They want a great product and they want a great price. And so I think as long as we continue to invest in our business, it's a flywheel that kind of adds on to theirs. And then we just got to be faster than there's a law of diminishing returns where if they consume too much of the profit pool, people will just stop launching products, right? Like the entrepreneurs who we are acquiring are launching on Amazon because they can make really good money launching on Amazon. And if suddenly there's, only a 5% profit margin to be made, they'll go other places, right? They'll do other things. And so there's a balance, and also with our scale and our ability to pull out cost and drive in stock and things like that, we should be able to stay on our front foot around that.
So tell us a bit more about, I guess, both how you differentiate yourself from the competition, because certainly there are other players. I know you've got at least one big competitor, which I think has attracted a fair amount of capital. So I'm just interested in how you differentiate yourself, but more specifically, if a brand is thinking about working with you, what's the value you get? How do you drive those synergies to the entrepreneur and across your whole product portfolio?
Yeah, for sure. So there's two. One of the interesting parts about our business is we're basically running two businesses within Perch. One is I call it our B2B business, which is our M&A business. And the reason I call it a B2B business is because I tell Nate, who runs that our M&A team, that his number one goal is to get NPS of 10. We want every seller who sells to us to tell all their friends that Perch is the only person that they should talk to. And that's actually been working. We have a really high referral rate. And so we try to be fair and transparent and quick and know what we're talking about and be very knowledgeable. And so on that side of the business, that's where we compete a little bit more directly with these competitors, is on the acquisition side, because there are lots. We think there's tens of thousands of sellers that fit our criteria in terms of having profitable business, high quality product, great ratings and reviews, product market fit, all the things that I mentioned before. And so it's not like there's 10 and we have to fight tooth and nail to get those 10. There's a pretty deep and wide set. But still, every year, just like any small business ecosystem, 100% of people are not selling this year. So every year, only a certain percent of people decide to sell, because selling your business, your baby, is a very personal thing. And maybe somebody can tempt you with enough money, but more often than not, it's a life decision, right? I'm tired of working this hard, or I just had my first grandkid, or I just want to move to Florida and relax for a while. Or so a bunch of people want to start their next business. They say, hey, I've gotten to a point where I feel like this is a little bit more steady state, and I want to take this money and put half in savings and go start my next thing. And so how we win on that side is twofold. One, as I mentioned before, is just being really transparent and really fair and really thoughtful with the entrepreneurs. And this is a really big life decision for them. And it's the biggest financial transaction in their life, typically by a very wide margin. And so being really transparent about how we think about businesses, how we value them, as we go through the diligence, keeping them along goes a long way with them. And then the second piece is showing them a little bit of the magic sauce, right? Showing them what we're going to do with their brand, why Perch is the best place for it. Give them examples of how we've taken other brands and grown them either through product launches or new geographies or new channels and things like that, so they can see that Perch is a great place for their brand. So that's on the B2B side, on the M&A side. On the B2C side, there's a mix of two things that I would say at a very high level. One is we have this saying that actually I heard from somebody relatively senior at Amazon, that he said retail is detail. Right. And we've kind of adopted that saying within Perch. So one side of the magic sauce at Perch is retail is detail. And so we get really maniacal about making sure that every listing we have is great, right? Has great photography, has great bullets, has a great title, is kept up to date daily and weekly in terms of the latest information. We're responding to customer questions. We're getting all over any customer issues if they got a broken product or something like that, making sure we refund them or send them a replacement. And so there's a bunch of just day-to-day stuff we need to do to be great. And then the second is we have this really cool and interesting information and data advantage that we can use to be great at things like pricing and advertising and promotions. And so because we're running lots of brands, I think we're running kind of well over 60 brands at this point. We can do pricing tests and advertising tests and promotions tests and merchandising tests at a scale that many other people cannot. And we can watch and measure what happens. And we're also kind of ingesting not just our data, but our competitors' data daily. And soon we'll be doing it pretty frequently intraday. And so we can also see how competitors are pricing and deals and promotions they're running and things like that. And so as we continue to grow and expand, our ability to understand what levers make the most impact in a data-driven, scalable way, and then apply that across our entire portfolio with the click of a button, it's really powerful and really interesting. It already is, but continues to build on itself, which is fun.
So as we think about, and it's a great conversation. It's a whole space. Steve and I were chatting about this. It's a whole space that's, I wouldn't say new to us, but it's very interesting to us because it's in and around the ecosystem. Marketplaces seem to be having their day right now. We started to talk about supply chain, the supply pain that's happening, and I was speaking to Sucharita Kadali yesterday from Forrester, and she's saying this is where marketplaces can really win because of this distributed product model. It's not all in the same place, and it feels like the marketplace momentum is just beginning, and it's going to play a pretty interesting role. Time to shine. Do you agree?
Yeah, absolutely. It does. This feels like the first or second pitch of the first inning. And I agree. Marketplaces broadly are gaining a lot of steam, and there's a lot of kind of the ecosystem building around them that's going to help reinforce this. And so I think the next decade for e-com and retail will be really, really interesting. And I think we're just getting started.
It also feels to me like it's also going to be a flight to quality, right? I mean, what you've been describing is well-run. You're running well-run businesses, all the moving parts around everything from, treating the customer right to innovative products to responding to customers as opposed to the kind of open the door one day, close the door the next, right? So it feels like in marketplaces, some days it can be like that, but it feels like there might be a flight to quality, if we could put it in the kind of the Bain consulting jargon.
Yeah, there you go. Yeah, I agree.
So what's next, Chris? We're coming up on our time here, but I'm just curious, what's on the horizon? Where do you hope to be in a few years' time, and what challenges are you hoping to overcome other than Amazon trying to squash you like a bug, which I'm sure won't happen because they would never do such a thing. But just on the off chance that might be on your radar screen, what's next for you guys?
Yeah, I mean, we have been chugging away for a couple of years now, and I would say most things are unfolding within, a few degrees of how we hoped they would. So I think there'll be a lot of the same in terms of finding high quality brands, bringing them onto the platform and expanding them into new geos and channels. I would say one thing that we're doing now is a little bit more of a data-driven retrospective now that we have all these brands, and our playbook generally has worked quite well, but it doesn't work on every brand. And so making sure we understand the winners and losers and what we could have learned pre-acquisition that can make us better and better over time about buying brands that work well within our platform. And so that's kind of a never, and we've been doing that, and we're just continuing to do it in a more data-driven way, and with more just time under our belt of running them. And then, we're really early days on a bunch of really exciting and interesting things in terms of, we have a kind of feels like weekly expanding list of brick and mortar retail partners that are interested in working with us and taking on our product portfolio. And so really excited to see lots of those relationships starting. As you guys probably know, it takes several years for a brick and mortar relationship to kind of reach full potential. And our product portfolio will continue growing in that time. So I think we'll continue having expanding conversations with them. But it's been really, honestly, I'd say 2 years ago, that was an area I didn't think would be a real expansion opportunity for us. And so I've been surprised at how much they've been interested in what we're doing and the products we're selling and the brands we're selling. And then, additional geographies. We've had some success in Europe, but hasn't been as much as we'd like because just, selling in Europe is tough, and all the compliance and the, and all the moving pieces,
language issues,
language and
packaging,
exactly, and so
well, I'm a Canadian, so I deal with and I've been on the other side, so that the number one question as the merchants here in Canada we ask is, do you have bilingual packaging? And they're like, what? Great conversation, super interesting. And on behalf of Steve and I, thanks so much for joining us. We wish you much continued success. Now, if somebody is listening and they're like, want to learn more about your business, who knows? Maybe it's an entrepreneur listening. Where should they go to find more information and get in touch?
Yeah, they should go to perchhq.com.
Keep it simple. Are you a LinkedIn guy? Or just?
I am on LinkedIn, yeah. So you can look me up on LinkedIn as well. And happy to connect there also.
Wonderful. Well, once again, thanks for joining us. It's been a real treat getting to know you. And again, wish you continued success and have a great rest of your day.
Yeah, thanks, guys. It's been fun.
If you like what you heard, please follow us on Apple, Spotify, Amazon Music, or your favorite podcast platforms, so you can catch up with all our great interviews. Subscribe so that just automatically shows up. Tell your friends, and also in new insights and new episodes will show up every week. So tell your friends, because that will help us share the word, the good wisdom. Now, be sure and check out, and be sure and check us out on our new YouTube channel. Not so new anymore. We got a couple episodes up there, and just look for Remarkable Retail.
And I'm Steve Dennis. You can check out more of my work at my website, stephenpdennis.com, or on Forbes, or on Twitter. And please check out my second edition of my book, Remarkable Retail: How to Win and Keep Customers in the Age of Disruption, available just about everywhere books are sold.
And I'm Michael LeBlanc, producer and host of the Voice of Retail podcast and a bunch of other stuff. You can find me on LinkedIn, learn about me on meleblanc.co. All right, Steve, great episode. Look forward to chatting again next week. Be safe and have a great rest of your day.